let me just start off by asking you, what brings you to Abu Dhabi? I mean, clearly your presence in the region has picked up since the merger. Talk to us about your expansion efforts in the Middle East.
But of course, the Abu Dhabi Finance Week is a great opportunity to be here and reconfirm our commitment to this region, which is fast growing. I think that we, with 5 trillion of assets, is growing faster than Europe. It's very fascinating to see what's going on here, so it's a great opportunity.
Yeah, in the last couple of months I've been speaking to other bank CEOs, some of your American peers, and they've also been talking about establishing RHQs in Saudi Arabia. Are you also thinking about expanding beyond the UAE into other parts of the Middle East as well, maybe Saudi Arabia too?
Well, we are quite well positioned in the region. We have operations other than in Abu Dhabi, in Dubai, but also in the Kingdom of Saudi Arabia, in Qatar, and in Bahrain. So I think that for the time being, what we are focused on is integration of the Credit Suisse and UBS operations. We have reinforced our presence here, so that's the main priority, is to really connect the Middle East with the rest of the global franchise. Yeah,
talking about the integration of your businesses, next year is going to be a big one because you've got the data migration happening in Switzerland. I know you started in Hong Kong already. How worried are you about how that's all going to go in 2025?
So things are moving well after Luxembourg, Singapore, Hong Kong. Switzerland is going to be the next phase. We are migrating 110 petabytes of data, which 1 petabyte is 500 billions of A4 pages. So that's quite complex. I'm worried in a healthy way, like one has to be worried about such a technical migration, but we are well prepared. So, and this is the last half of the second half of the migration, and then hopefully in the early part of 2026 we're going to be fully operational under one platform.
Yeah, and as far as the integration is going, just looking at everything, I mean, you're more than half of the way there on cost savings. It really does feel as though, as far as you're concerned, things are moving in line with the path that you had set out.
Yes, I think that I'm very pleased with the progress we've made, also on restructuring the balance sheet and repositioning the business. Most importantly, we did all that by staying close to clients, also delivering solid results in the last few quarters, and so we now really focus on the next phase, which is growth. After this integration, we're going to want to grow, and we start to invest in technology and making sure that we are well prepared for the future.
Are you worried that maybe one of the byproducts of all of this data mitigation and client migration, data migration, I should say, that one of the byproducts could be you could potentially lose clients in the process?
I mean, we take all the necessary steps to make sure that this is not happening. So the team is well prepared, very, very focused. So I'm not overly concerned about that matter. But there is no room for complacency in those kind of migrations.
Yeah, the Swiss government's about to publish the findings on the investigation into the takeover of Credit Suisse. Are you bracing yourself for the results of those findings and anything that you will be anticipated to do on the back of it?
I'm looking forward to see the report. We hope the necessary transparency will be provided on the reasons why Credit Suisse went down. We do believe it's absolutely crucial to fully understand that before moving into any changes of regulations or any steps that could undermine the competitiveness of the financial center.
Do you worry that perhaps Switzerland is moving to a place where the regulation may be over-onerous versus other jurisdictions around the world?
Yes, I am, but on the other hand, I'm still hopeful that some reasoning and proportionate outcome will come out, will prevail. But I have to say, for the time being, I'm hearing less facts, more emotions driving the debate, and hopefully things are going to cool off in the next few months.
The last time you spoke to Bloomberg TV, you said that one of your major concerns in 2025 was the flaring up of geopolitical risks. And of course, we're sitting here in the Middle East. We've seen another massive weekend. Earlier, I was speaking with a guest on how Assad himself and the regime isn't going to have a direct knock-on effect on global markets. But I do wonder whether, from your perspective, you actually do think that geopolitics could be the major headwind to markets in 2025.
I'm relieved and surprised to see how all these geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that, but one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other hand, we still see consumers and the economy quite resilient despite all these challenges. So, but we have to watch carefully those developments and not to be complacent.
How do you see the outlook for the global economy next year? It feels as though you're going to get like pockets of growth. The U.S. perhaps one of them, Europe less so. How do you square it all together?
Well, if you look at the fact that rates may come off, inflation seems to be under control for the time being, and potential deregulation in the U.S. Fostering M&A activity, that could be beneficial for the economy and for markets. On the other hand, as we mentioned, tariff may create some potential inflationary consequences. So. It's still very uncertain. I do believe that next year we're going to still continue to see a lot of volatility in financial markets, and therefore one has to be very diversified and look at opportunities to deploy cash in a diversified manner.
What would you say the risk-taking appetite is for UBS clients right now?
Well, risk appetite is balanced. I do believe that we see for clients opportunities to redeploy cash as we expect rates to come off. But I would say that not a lot of risk appetite in this environment. Balanced and diversification is key.
You mentioned earlier perhaps the deregulation drive that's going to be spearheaded out of the U.S. with the advent of the Trump administration. What knock-on effect is it going to have on the European banking industry, on the Swiss banking industry, if you have this deregulatory drive or less onerous regulation coming out of the U.S.? Again, it comes back to my original question about competitiveness.
Well, I think it's difficult to see. I think that it's a fact that Europe and in general, including Switzerland, are quite slow to react to what's going on in the U.S. I think that in such an environment, I don't really expect a lot of deregulation, but probably less regulation and more an ability to go through M&A, and that could probably change a little bit the picture, even outside the U.S.
Are you expecting deal making to pick up next year then?
I do expect some M&A to materialize. Also in Europe, we do see consolidation happening more at domestic level, but it could also be that some of this will translate into cross-border.
Yeah, well, I was going to ask you about that. In the UniCredit, obviously, have been quite active cross-border. Domestically, do you see this as a positive development for the European banking industry, that some form of consolidation has started to happen?
In general, yes, but I mean, at the end of the day, in order to really foster consolidation in Europe, you need to have a banking union. You need to have a more solid approach to consolidation. So at this stage, it's a kind of domestic consolidation, but of course, it's far from being a good model that can expand it to more realities in the banking landscape in Europe.
Yeah, and just a final question for you, since we're going to end on Europe and this consolidation push that has been happening. Many people have been talking about the Draghi competitiveness report and what Europe needs to do to sort of catch up in terms of productivity. Do you think that Europe has the right focus now to do what it takes to get the economy back to speed again?
unfortunately, I don't think there is the right focus at this stage. It seems to me that Europe is much more preoccupied at country level to address their own political worries, and there is less focus on the European project. So I'm afraid, it looks like a very good piece of work that has very good ideas, but is unlikely to be implemented in the short term.
Difficult to implement as ever.